Well, good morning. This is March 4th, 2025. And so first and foremost, I want to say a big happy birthday to my mom. Happy birthday, Mom. Sorry we can't be there to celebrate, which brings me to my second point, which is I am just outside of Big Bend National Park in Southwest Texas with my family as we celebrate my daughter's last spring break as a college student and all of her hard work and success and dedication. And so we're just off doing what we love to do, which is visiting our nation's beautiful national parks. Also explains the attire, which I know you'll understand. It is a little bit cold this morning, but I woke up thinking about you all after seeing the market yesterday and the news, and know that that's certainly going to be unsettling for a lot of people. And so I just want to take a minute to provide some thoughts about that. Yesterday, President Trump announced that he does intend to move forward with 25% tariffs on China, or on Mexico and on Canada, and to increase some existing tariffs on China. And what that means, well, first of all, what that is, if you're not aware, is simply, and I apologize for the wind, hopefully you'll be able to hear this. What that means is it's a tax. And so a tariff is nothing more than a tax on the goods produced in another country. And the reason the market's responding this way is because that tax is paid by us. If we buy goods from Mexico or from Canada, then we're going to experience that 25% tariff as the price of those goods that we're purchasing goes up. And so the reason the market is responding in this way is, one, it means that that's going to hit Americans in the pocketbook, and at a time when inflation is already such a significant part of the economic conversation. And so Americans are going to feel this in their pocketbooks as they pay more for those goods. The second reason is because it introduces uncertainty, where no one is certain how Canada and Mexico and China are going to respond to these tariffs. I do want to provide a little bit of perspective, as I've been in this business for 25 years now, and I thought back on the last 10 years and the conversation that we've been having. And the conversation that we've been having for the last 10 years is how much our government is spending above what it brings in tax receipts, that being the deficit. And every year since 2015, our deficit has increased, meaning we have spent more and more each year than we've taken in tax receipts. That has led to an increase in the national debt, which now stands at around $36 trillion, with nearly $1 trillion a year being interest paid on that debt. And so we're in this debt cycle that is not sustainable. And that is a significant part of the reason that President Trump is doing this. Whether you agree or disagree, again, not my point. I'm not here for political commentary. I'm here to hopefully provide a little bit of perspective. And really, what I ultimately want to provide is encouragement and a reminder to stay focused on the long term. Because here's the deal. Tariffs aren't new. Every country uses them. America's used them in the past. We'll use them again in the future. Uncertainty is not new. It happens all the time, and markets don't like it. They respond with volatility. But what we do know, and what's also new, is that markets are going to work through this and adapt. And right now, there's a whole lot of noise. There's a lot of noise because of the political conversation. There's a lot of noise because things are being shaken up, and it is unsettling. I do not like to look at this market and see red everywhere. And as I said earlier, I suspect that we're going to see that again. But markets adapt, and what I want to remind our clients of is that your portfolios are structured for this. Very, very many of you have done advanced financial planning with us, and you'll remember the Monte Carlo analysis that we do, which introduces random investment volatility or market volatility into your portfolios for times just like this. So we've tested our portfolios. Our portfolios are diversified strategically. They're asset allocated strategically in order to dampen this volatility that we're experiencing in the stock market right now. And so your portfolios are going to withstand this. It's important to remember that what's happening today is not going to affect your tomorrow. You don't need all of your portfolio tomorrow or next year or the year after. Many of you are very long-term investors. Some of you are mid-term investors. But regardless of what type of investor you are, your portfolio is structured for that. What I want you to know this morning is that we are watching this and monitoring it and keeping up with it. We're looking at how it affects our clients' portfolios, and we're here to answer your questions. What I don't want you to be is discouraged or afraid or to do things that are going to impact your long-term financial objectives. Okay, so I hope that this was a little bit helpful. I know it's probably not the most educational video I could have made, but that's really not the point. The point is encouragement and a reminder to stay focused on the long term. Stay where your portfolio is. Your portfolio is a long-term portfolio, and you would do well to stay in that mindset as well, regardless of how unsettling things are in the short term. If you have questions about this, if you want to talk about it, feel free to reach out to our office and set up a time. I'll be back in the office next week, but my entire team is there working this week, and we are there to help. So I look forward to talking with you soon. Thanks for listening.